and Bitcoin are highly correlated. And when also the thing in mind that the S&P is likely not going to bottom until inflation peaks, I think it's safe to assume that we have plenty of time. Like, you have time, and you don't necessarily have time to bottom to be successful. You just need to have a strategy to sort of slowly move into the market.
Welcome back to the Daily Crypto. Inflation has reportedly come in at about 9.1% year over year. This has come as a surprise since many forecasts predicted 8.8%. What did previous generations of investors learn when they were in a very high inflationary period? Is this the peak of inflation? What does this mean for Bitcoin? Keep watching to find out as we answer these questions with Benjamin Cohen. One thing that has been consistent from the charts over the past 80 years is that the bear market did not really end until inflation peaked. This begs the question, is this the peak of inflation?
Some of the things that you could argue are somewhat promising signs are oil is back down below $100. And I do think the real estate market is at least in housing sales, is starting to kind of roll over a bit. There's an increase in listings. Inventory is higher. There's also an increase in the number of houses where people are dropping their prices because they're getting scared that they maybe missed the top, and now the prices are going back down. And obviously that's being somewhat affected by, or largely affected by, these the rising interest rates by the Fed. Therefore, mortgage rates are much higher.
In spite of all that, Cohen adds that things could change quickly. It is possible that oil, for example, could be back above $100 by next week, but it does not necessarily mean it is going to have a huge effect on it in the short term. He says to some degree it could be a lagging indicator.
As a lagging indicator to some degree, you have to think back to where we were a year ago, not just where we were last month.
In July 2021, oil was down at $72 per barrel, so it is certainly true that the price fall will in fact help.
Chopping in this range for a while, and despite that, chopping up and down, inflation has been continuing to go higher, right? Year over year, it has been continuing to go higher. Of course, it makes up a lot more than just oil, right? I mean, this is not the thing that controls inflation by itself. So, I look at this inflation chart and say, well, what are time frames?
As the inflation has worsened, have we seen the worst of it?
But I look at these, this inflation chart, and I say, well, there were some impulsive rallies by inflation. Maybe rally is not the right word, but here you can see it really started to move up starting in July of 72 is where it sort of hit that local bottom. You could maybe equate that to May of 2020 or something over here. But interestingly, this went up and it did not peak until December of 74, right? December of 74. So it essentially took about 30 months or so, plus or minus a month or two, right? About 30 months or so for inflation to peak. Now, we actually had a secondary peak later on. We'll talk about that in a little bit. But it took about 30 months for inflation to ultimately peak. If we were to measure this from the local bottom there in April or May or June, so let's say June of 2020, you can see that it's currently been about 23 months out or so, right? 23 months out.
So another 7 months on from here will put us out in early 2023. Cohen continues.
There was also an impulsive rally in inflation that really started here in the late 30s, and it did not peak until about 43 months later. So you kind of have two separate periods here, one 30 months, one 43 months. We're currently looking at around 23 months from that local bottom.
So sad to hear, but sometimes we have a month or so where it goes down. Ultimately, that did not matter since inflation kept going higher. But there is also the possibility that inflation has peaked since we are 24 months in now, and this most recent month is not updated. It is certainly always possible, but in that same way that people have been calling for the peak of every single month for the entire year basically. In that case, how do we make sense of this? Cohen weighs in on this.
I look at this, and what I do, because I wasn't an investor back during this period of time over here. I wasn't even alive. I go look at the S&P 500 and I say, well, what was the S&P 500 doing back over here? And that could probably give us some insight into, yet again, how Bitcoin might behave. Would it not? And perhaps what I'll do is I'll go ahead and create that new scale. And then I'll switch this over to a logarithmic scale as well. So what we're talking about in terms of these inflationary periods, and we can talk about a potential inflationary decade as well, is that you can see that in that first run of inflation where it went up to these similar levels, you can see again, the blue line is the S&P. Inflation peaked when the S&P bottomed right around when inflation peaked. Okay, that is the thing I think that's important.
Why is this so important? Cohen adds that it is because the Fed's mandate is not to protect your portfolio, despite whatever other people might have you believing.
They could easily continue raising interest rates, and it's likely what they're going to do. I do think they will continue raising interest rates. I do not think that the Fed is about to pivot. And when inflation tops, then the Fed can pivot.
He points out that once inflation has peaked and the Fed actually sees the data where inflation is actually starting to come back down, then, and only likely then, will they pivot. Cohen indicates that there is a low likelihood that the Fed will do that ahead of the event.
I also think from some perspective, everyone's sort of used to this quantitative easing period where they just print money constantly, and it's a fairly loose monetary policy. If you look at things like you can go look at some other metrics like their balance sheet and whatnot, and ultimately see that their balance sheet is ultimately it's going down now, right? After such a long period of time, it's finally going down, and I believe, yeah, you think you can kind of see it here, where it's finally starting to curl over here.
Whenever you think inflation is going to peak, Cohen points out that inflation is something we cannot simply dismiss because some indicator says so. He adds that inflation can easily affect markets in ways that people have not seen in a while. Why? Because it has just not been a problem for a while. The last time inflation was this high was back in the early 80s, so to say that the stock market has to be at a local bottom or just simply because of a few indicators sort of ignores the macro. In that case, at the next meeting, is it going to be 25, 50, 75, or 100 basis points? Cohen predicts that it would be at least 75, but probably no higher than 100.
Somewhere between 75 to 100 basis points is likely how much they're going to raise interest rates. If you go look at, why don't we go ahead and pull up interest rates so we can kind of see where that currently is, and you can see right here, interest rates, and I can go ahead and remove the S&P from this one because that's not really as relevant to what I want to talk about right here. If you look at interest rates right now, you can see they are going up quite quickly at a pace we haven't seen in quite some time. Now, if we get a 75 basis point hike, it's going to basically get it up to that same level that we were at in late 2018 or early 2019. Okay. And I doubt they're going to stop there because I doubt inflation is going to be fully under control even in the next month or two.
Cohen makes it clear that he assumes we are already in a recession, but the announcement has not been made official, of course.
If layoffs really start to see a huge uptick in layoffs, and that's also something that the Fed wants to keep a close eye on, at some point they're gonna break something more than likely, and at that point they will likely be forced to pivot. Okay, but I still think we still have many more months of this period before we're necessarily going to break something. So I look at it and say, you know what, we have the rest of 2022. They'll likely pivot sometime. My guess is in 2023. I doubt they're going to pivot this year. They might slow down the interest rate hikes, but I don't think they're necessarily going to go and start cutting them this year. I highly doubt it. So I'd say they'll probably pivot in 2023, and if they don't, very likely early 2024, just in time for the next Bitcoin halving.
What do we expect with Bitcoin?
So, I think it's important to just sort of recognize that, with Bitcoin, what I look at when I look at this, this overall chart, is I say, you know what, after every bear market for Bitcoin, we usually have a reaccumulation phase where it goes kind of sideways for a while, right? You can kind of see that here, you can kind of see it here as well, and to a lesser extent over here. but you have this sort of accumulation phase that lasts for a while. And I look at that and I say, well, I would argue that there's likely a good chance that the that the Bitcoin is going to have some type of reaccumulation phase in this range, right? Where you'll have plenty of time to get your positions before the next bull market. Now, that's what my gut tells me. I could be wrong, but that's what sort of my gut tells me, is that we're going to spend some time playing in the sandbox for a while before we gear up for the next Bitcoin halving. And hopefully by that point, inflation's coming back down and the Fed has pivoted and we're back in business in that sense. But I would say, I think we have plenty of time. I look at these things over here, both the 2014 bear market and the 2018 bear market, where the macro wasn't as bad. And it still shows you that we still had plenty of time to more or less go sideways off and on before finally going up into a new all-time high.
Cohen adds that this is the most likely outcome, some consolidation with somewhat of a bearish bias for a little while, which will eventually just be going sideways. Then we prepare for the next bull market around the next Bitcoin halving. Until then, Cohen states it is just business as usual, and he does not really think it is worth overcomplicating things. He suggests that we do not fight the Fed. The Fed will fight inflation till it begins to decline, he states. Plus, we have to deal with the fact that we just printed 9.1% year on year. Thanks for watching this video. What are your thoughts on the inflation rate? Drop your comments in the comment section below. Don't forget to like, share, and subscribe to our YouTube channel. See you on the next one. Until then, bye.